Hello everybody, this is AT from ForexPreparation.com. Today is Tuesday, the 5th of February 2008, and we're looking at the euro dollar. Yesterday I suggested that we might start setting up this currency pair because of this divergence which I saw on the 1 hour chart between the relative strength indicator and the price chart right here. I noticed it on the most of the time scales, and that was the reason that I advise that you start setting up this currency pair. And another thing is that we saw this support break of this this support level. Okay, if we go to an 8 hours time frame, what we can see here is again this almost the same picture as yesterday. It hasn't changed much. We still have this divergence between the relative strength indicator and the price chart, which is still giving us a negative signal, and pretty much this range trading resulted in on the daily chart in this small green candle which half covered the previous day's red candle, which is some kind of a bullish signal. And this signal is mixing up our sell signals. So if you want to start again setting up this currency pair, just be very cautious, since this is not a very bearish signal. If we go back again to the 1 hour chart, another thing that I might suggest you to do is just wait and see whether the price will close below this level of 1.4795, which is our next support level, and from there on you can start setting again this currency pair, since this divergence hasn't been, it's still holding, and the resistance level set by the level of the peak of on 1.4900 hasn't been broken yet. On the other side, so what might happen is we might see a continuation of our uptrend. It is very dangerous to trade against the trend as a general rule, and we might see a rebounce from this lower boundary of our channel in which the currency has been trading since the last couple of weeks. So just be very careful with this currency pair. Another thing that I saw was with the currency pair US dollar, and here, as you know, those two currency pairs, the euro dollar and the Swiss franc dollar, are negatively correlated, or if the one goes up, the other is supposed to go down. So what I saw here is this trend line break, and if I zoom in this part here, actually let's zoom in this part after this divergence, because we saw here a positive divergence between the price chart and the relative strength indicator. After this divergence and this resistance break of our previous high value of 1.849, we can see that right here we have something like a flag pattern, which is a continuation pattern, and this might mean that we might be in the beginning of an initiation of an uptrend. And if this is happening, this means that we might see the euro dollar currency pair to start falling down instead of going up. So again, if we zoom out this part and if we go to an 8 hours time frame, what we can see here is we have a divergence between the relative strength indicator and the price chart, which is this is a positive divergence, and this is a bullish signal. We have a trend line break. If we connect those two highs here, we can see that the price has closed above the this trend line, and it has actually been trading it has been range trading in this area here. So it has hovered above the trend line, and this again is a bullish signal. On the other side, the relative strength indicator on the 8 hours chart is trending on the level of 51, which is and it is starting to curve up, which is another bullish signal. If you go to a daily chart, what you can see here is again this divergence, which is smaller than the 8 hours chart, but it is again the same divergence which we saw there. And another thing that makes me believe we can see more climbs to the upside is that we have this green candle here, and after that we saw this small bodied candle with large upper shadow, which is a signal that we might see our next candle as being a green candle. So again, if you want, let's go to the 1 hour chart. Right now the price is 1.890. The support level is set on 1.850, which are 40 pips below the price action. Or in other words, if you open a buy position on this level, your stop loss order should be set on 1.850. So the price target is around 120 pips above the where the price is trading at right now, or this is the upper boundary of this channel. If I zoom in this part here, you can see it better. This is the channel in which I'm connecting this low value here with probably this is going to result in a low point if we see a continuation of this uptrend. So in other words, if you want to be more speculative today, you can open a buy position and place a stop loss order 40 pips below the price action, where the price action is right now, or on the level of 1.850. Your price target should be set on approximately this level of 1010, which is 120 pips above the price action right now. Me personally, I don't think that I will be trading today, since I don't have very clear signal, and this is kind of very speculative trading to me. So I will be most likely just watching the markets, and if something interesting happens, I may open a small buy position. That's all for today. Thank you.